Good morning. It's July 24th. It's a Monday. Hopefully, you had a wonderful summer weekend. We're going to talk a little bit about a good report done by Michael over at the League Lag Report. And he noted that the rotation to risk-off assets last week, was happening, meaning staples, utilities, low vol treasuries, you get it. And he has a few interesting ratios that he looks at. There's two short-term ones. There's one intermediate-term ones. For the short-term ones, the first looks at utilities versus the S&P, so you can look at the SPY, and it's showing a risk-off mode. And then another short-term one that looks at maybe longer duration treasuries, so the VLGSX versus the SPY, which is also showing a risk-off mode. You compare that to more intermediate-term signal of lumber to gold. So lumber being, a cyclical type of product because you make houses with it. And then gold being more of a defensive asset. So as you know, when people are in a risk-off mode, gold typically goes up. But if you look at that over the last, he looks at maybe 13 weeks, the cyclical has been a bit stronger. So you're getting a little bit mixed signals there. And obviously, it's been a huge run year to date, but it's been in a select number of securities. And so a lot of people are in really different camps of where's the economy been, where is it going, what's the duration, are we hitting into a credit crunch? So many things to think about. And so we would let you know to do one thing is look at positioning. We can show you where that is on the Longbow dashboard. And then also look at other statistics like the P&Is, which have been softening, and some things like Japan machine tool orders, which have been lower. And so when you're looking at statistics, look at a wide range of things, but you have to care about where everybody else is positioned. So I think that what surprised a lot of people going into 2023 is that the markets really moved up. Obviously, AI was one piece of it, and people's expectations about inflation, but people were really on the sidelines, either with cash or risk off. And when you look at today, even after this big run, here in the Longbow, I'm on the tab Futures Contract Positioning. And I'm looking at the S&P, Russell, VIX, Dow Jones, and even NASDAQ here in the top. And I'm bringing you over to the Z-score factors. So if I'm looking at a small negative number, it means that people are maybe a little bit short, but it's nothing out of whack. But they're not super long. And so there could be more room to run if people are seeing a melt up through earnings season, because capital will flow to there to be positioned higher. You're seeing a little bit higher here on the Russell, but again, whether it's a 1 year or 3 year Z-scored, the positionings are not very meaningful. You do see it on the VIX, right? So when you look at that, you could say, gosh, because if the VIX goes down, this could melt up other securities, other indexes. And I think the thing I want to point out most is the NASDAQ mini. Like that's basically flat. So there's a lot more positioning that could occur here, meaning it could melt up markets. And you pair that with now fundamental points, which is in this earnings season, it's a pretty low bar. So we wrote about in Longbow Arrow's note this morning that most likely a lot of companies can actually outperform. You may not see the pop, though, that you saw in the first quarter, because it's going to come down to the Q&A and guidance. So are people going to be extrapolating what they're doing now, their outperformance now, to the future? Are they going to be raising prices versus reducing prices? Is demand staying strong and increasing, or is it softening? And those types of things and the change in trend could create opportunities and also risks, and having a really different, result after earnings on the stock versus in the first quarter. So there's lots of interesting things. It's a big week in earnings this week, and so we'll keep you up to date on that in both the arrows and our videos. But we do note here that if you see any kind of positive strength coming out from Q&A guidance, people are not positioned for it, so you could continue to see a melt up. But then again, we've also noted that a lot of the melt up has come from quantitative strategies. So if there's trending things lower, these can also move negative because you're not seeing a very strong positioning or a very negative positioning, so it could flip to either. So hopefully that makes sense to you. I know there's a lot of complexity in what I just mentioned, but I think it is important to know to take a look at positioning, to know where other people are positioned, because that could drive the magnitude and direction of positions during earnings season, which is much more fundamentally driven event. Talk to you tomorrow.